And hello, everyone. Good to see you all again. For those that I'm seeing for the second time after last week's session, and for any new faces, welcome. Just as a quick introduction, my name is Duncan, and I have been working on sort of building partnerships for this new fund. We're called the Growth Impact Fund. We're delivered by Unlimited, actually the big issue. They have an investment arm and an organization called Shift. And we recently launched this fund in May. So we're brand new. We haven't actually made an investment yet, or we're just about to make our first investment. So really good timing if you're interested in investment. Just a little bit about us. So we invest between £50,000 and 1.5 million. We have some grant support available as well for organizations and individuals who may not yet feel super confident that they're quite ready for that type of investment yet, who may want a little bit of support to develop their idea, develop their impact model. We do look for mainly social businesses, people that are interested in both delivering a business model, but also having an impact. But I will talk about investment more broadly today, just so I try and make it as universal as possible. It's really important for me that we do that, and we don't just focus on us as a fund. And we're on a mission to make investment more accessible, which is one of the reasons why we're doing this today.
I think we've frozen.
Can everybody else still hear me? Did we lose Duncan?
Yeah, we've lost Duncan.
We've lost Duncan. Okay, he's been having some issues with his internet. And then unfortunately, I just had issues as well, so I dropped off for a bit. But let's maybe give him a second. He looks like he's restarting.
Can you hear me?
Yep.
Yes.
Sorry, my internet went not very good. My Wi-Fi has been a bit strange today. I don't know what's going on. So anyway, I don't know where you got to, but hopefully, did you hear most of that introduction? Just a bit about us and the fund?
Yeah.
Great. What are we going to do today? So we're going to talk about the process for actually accessing investment, and I'll talk about the Growth Impact Fund, but as I said, I'll try and talk about other investors as well. I'll talk about examples of different investors out there. I'll then talk about the assessment process. So what do I mean by that? It's sort of what investors are looking at from you, and some tips to navigate through the journey. So hopefully I'll try and keep it interactive. I'll stop at different moments throughout the workshop to see if you've got any feedback, or you've got any questions. And yeah, honestly, there are no stupid questions. Investment is as complicated as it gets. I've been doing this for a few years now, and I'm still learning every day. So please feel free to ask any questions, and I'll try my best to answer them. And if there's anything I can't answer, I'll find out for you and share any resources or information if that's useful. So just a quick disclaimer. We're not here to provide financial advice, so I'm not going to tell you what investment you should go for or shouldn't go for. I'm not making any recommendations on specific investors, and every investor is slightly different. So I can't promise you that it's going to be exactly the same for who you go for and interact with, but there are some general things that investors work around, and I'll do my best to sort of tell you, more broadly what the process is like. So just a quick disclaimer on those things, just so you know, but I will do my best to make it as universal as possible. So what are the different steps that we're going to go through today? I'm going to talk to you about finding an investor. So what do you actually do to find an investor that might be a good fit for you? We're going to talk about building relationships. So what are some things that investors might look for, and what should you be looking for when you're doing that initial sort of, last week we talked about it as dating, you're getting into a bit of a relationship with that investor. So what are some of the questions that you might want to ask in that first stage to understand if they're a good fit for you, as well as if them trying to understand if you're a good fit for them? what does the assessment process look like? And then what does the follow-up look like? So those are the 4 sections we'll cover today, really taking you through the process of investment. So let's dig into the first section, finding an investor. So the first thing to talk about is really, what is your ambition or goal as a business, as a social business, or whatever you're trying to do? And typically investors look at this from 2 ways. One is you might come at this from saying, well, you already have a business model in mind. So you may say, well, I want to open a cafe, or I want to, run a shop, or I want to do this. And you're then seeking like a mission. So your mission might be, well, actually, there's just not much, if you're trying to build a cafe, you might say there's not enough vegetarian food in my local area, or there's not types of food that's like appropriate to my community, or, I want to see more diversity of different foods and things in that. Then the other type might be that you've got a mission. So you already know what you want to do, and you're trying to make a business model that will fit it. So you're trying to think about who might pay for this? How can I make this work? What are the different funding options that I've got available to me? And you really want to make sure that you find an investor that really understands what your goals are. Like, how much do you want to grow as a business? Do you want, 1 cafe or coffee shop? Do you want 50? Do you want to just focus in your local area and be regional? Or do you want to be nationwide? Do you want to be global? Because different investors are interested in different things. Some will be all about, oh, we want you to grow as quickly as possible and as fast as possible. Others will be less interested in that because it feels risky to them, and they just want you to focus on one thing. But if you know what your ambition is and what you're trying to do, then it really helps you say, okay, I can figure out which investor is actually aligned to me or not. So if I take the Growth Impact Fund as an example, we are looking for organizations that are looking to grow, but we want organizations that are looking to grow sustainably. We're not looking for people to grow at crazy rates that it's like unsustainable. We want people to be able to like grow at a good sustained pace. And that's why we have different options available. And that's what we're focusing on. And the mission, we really want to tackle UK inequality. So we want to support organizations that are interested in inequality in the UK, whether that's gender inequality, whether that's race inequality, whether that's deprivation in a certain local area. That's what we're interested in. So the next thing that you want to have a look at, and we talked about this a lot last week. So for those that weren't here last week, I'll do a little bit of an overview, but there's different products available in the market. And you kind of want to know, does the investor actually offer the product that's best suited for you based on your stage and based on your need? So last week we talked about the 3 different types of investments available, which is debt. So that would be like loans, it could be credit cards, it could be overdraft facilities. And then equity, which is where someone takes a share or ownership in your business and they partner with you. And the way that they make money is that they then sell the ownership or share when after the business has grown to someone else. And that might be back to you, that might be to another investor, but that's how they make their money. And we also talked about this example of something in the middle called revenue funding, where an investor would take a percentage of the revenue, like the amount of turnover or trading income that you're making each quarter. And it's a bit more of a flexible combination between equity and debt, because they don't take an ownership in your business, but it's more patient than debt, which can be quite short term, and it often asks you to repay on a regular basis. But your business may not be quite set up where you're getting the income on a regular basis, say on a monthly basis or a quarterly basis. So you really kind of want to know, even if you don't know for sure yet, you want to get a gauge of what type of product might be a good fit for you based on your stage of business, based again on your goals and what you're trying to achieve. We did last week, we did a bit of an exercise where we said, do you want tailored expertise to support you in your business? Or do you want an investor who's quite hands-off? Do you want control? How much control do you want? It's those types of questions that will help you understand whether debt or equity or revenue funding is a good fit for you. So that's the other thing to just take into account. And then the big thing that you need to look out for with investors when you're trying to find the right investor is their eligibility criteria. So everyone's got a different eligibility criteria, but these are some of the things that they're going to talk to you during the process. So, for example, an investor might have a sector focus. So they may say, oh, we're focusing on businesses that are selling to consumers, consumer businesses. or they might say, we're really interested in technology companies. In terms of business model, they might ask you questions around, are you a business to consumer product? Are you a business to business? Or are you selling to government? Geography, some might be focusing in London, Southwest, like outside of the UK, so everyone's got a slightly different geographic focus. Stage, age, and amount. So they might ask you if you've been trading for more than 6 months, or if you've been trading for more than a year. And some investors will look for that. Some investors don't mind if some investors will just ask you to register as you're going through the process and they're really early stage. And then the amount. So some may say we only offer, like for example, the Growth Impact Fund, we offer between 50,000 and 1.5 million. But you may be looking for 20K. You might be looking for more than that. You might be looking for 10 million. Who knows? So just understanding the different offers that are available. They also may ask you to see if you have an asset. So like, do you have something like a building or something that they can secure the investment against? So we don't, for example, ask for that because we think for early stage businesses, it's quite unusual that you would have a property or something like that in place. And it takes time to get those things. So those are just some things that investors will be looking for. And then the final thing is that every investor's got a different risk and return preference. So can anyone give me an idea of does anyone have an idea of what I mean when I talk about risk and return preference? Does anyone maybe want to make a suggestion?
Is that more associated with debt?
It's actually associated with both, but that is a good question. So basically with risk and return preferences, it's basically how much risk am I willing to take on as an investor in order to make sure I get the return that I'm looking for. So if, for example, debt investors, they don't really like taking big risks. They kind of like want small risks, but they accept that they take a smaller return of the pie. So for example, they may take a 3% or 4% return of their investment, but they want that to be quite low risk. If you're working with like an equity investor or someone who does revenue funding, they may say, look, we're willing to take more of a risk here, but we maybe want a bigger part of the return of how you do. So you just need to be aware of what their preferences are and also what's your comfort level. How much are you willing to give back to the investor is one way to think about that when you're thinking about what type of investors might be a good fit. So the other thing to take into account is understanding your timeframes. So how quickly do you need investment? And the way I think about this is if you've got a really high need, like for an investment over the next, say 2 months, and you've not got much runway. So what I mean by runway is you might run out of funding, whatever funding you've got at the moment. You may have no funding at the moment, but you're just trying to sustain yourself. So if your runway is quite limited and your need is quite high, like you need the investment quite quickly, then the speed of the decision is probably more important for you. How quickly can an investor get you the money? Whereas if you've got slightly longer time frames and your need is high, it can still be high, but you're a bit willing to wait, you can be a bit more patient or flexible, then alignment, fit, like making sure you've got the right partner is really the most important thing. So it's worth having a think about where you're at on this sort of, graph here. Are you focusing on alignment or do you need investment quickly? And that might change at any given time, but it's just a bit of a model to think through as you're going through this process. So what I'm going to do now, so if you remember, those are the things. So ambition, how aligned is the investor to you? Product fit, do you get the right product from investors? And is that what you're looking for? Eligibility and timeframes, those are the 4 things I think about. So let's just walk through some different types of examples of investors out there, just to give you an example of how they differ. So for example, one type of investor might be your family, your friends, or public. Again, this is not investment advice. Be careful taking investment from family, friends, or public because there's risks associated with it. But I would just say, typically, if you think about their ambition, they're going to be aligned probably more to your mission because they're trying to really, support you often and support what you're trying to do. They may also be interested in a return, but that's probably what they're thinking about. Product fit, that will often depend on both your preferences. You may say, I want to give you equity. You may say, actually, I want a loan, but you'd often agree that together. Eligibility, there's probably not much eligibility because these are friends or family. So it's more about agreeing again together that you're going to do that. And timeframes are going to vary as well, depending on your need. An angel investor is someone who invests in really early stage businesses, and they tend to invest in equity. So in terms of their ambition, they are looking for a big return. So they look for high growth potential businesses and social businesses that are really looking to like solve big problems. And they want to be mission aligned with you as well, but they're looking for big scale problems. So if you're not looking to grow at a substantial rate, angels may not be the best fit for you, because that's often what they're trying to do. They're trying to solve either nationwide or global based issues. Product fit, they're mainly looking to provide equity to take ownership in the business, because that's the one that how they can get a bigger return based on their risk and return profile. They often will look at early stage businesses in terms of eligibility, but again, they want strong ambitions. And their timeframes, it can take a few months to access investment. So if you want to get in, start the process within an angel, then think about if I need 3 months, say, then you probably need to start now if you're looking for investment in, say, October. So just a bit of a gauge of when you need to start the process. Venture capitalists are very similar to angels. They just tend to invest at a slightly later stage. Often once you've maybe got a little bit of income, or you've validated your idea, you've got some proof that it really works, or that you've got a customer, that's when they come in. And they really dig deep into your business model. So it can take them sometimes up to 6 months actually to make an investment into you. Some are much quicker, but just being aware of this timeframes. They've also got big, broad ambitions. We'll move into sort of more of like the debt-based investors now. Banks, SME funders, and social investors. You may have heard, yeah.
I do have a question.
Go for it.
Yeah, just a quick question. So just in your experience, when it comes on, if you go back to the slide with the angel investors of venture capital, just statistically, angels, venture capital, when it comes on to social investment type, sick kicks, or even what percentage of social investments have you found are coming from angels and venture capital, especially like venture capital? Because Great
question. Not a lot. So one of the reasons why the Growth Impact Fund exists, for example, is because we recognized there wasn't a lot of equity in the market for early stage businesses that had a social mission. And so we wanted to increase that. A lot of the angels and venture capitalists will focus on technology-based businesses. So what happens if you're not a technology-based business? Do you get supported? So we focus outside of technology. We do invest in technology, but we focus outside of technology as well, because we recognize there are different models. You don't always have to be a technology company to be able to grow. So we recognize that. Does that make sense? Does that answer your question?
Good. Yeah, thank you.
You kind of touched on a few things. Are you all right for some questions now, or?
I'm just going to finish off this section, then I'll take questions, just because I want to finish this bit, and then we'll take any questions, if that's all right. So I think just to finish this bit off, banks, SME funders. So if we talk about equity investors, we talked about having big global ambitions. They want to see that you've got a big ambition. Banks and SME funders. So SME funders are similar to banks, but they just don't call themselves a bank, basically. And they call them like a small to medium enterprise funder. They are just focusing on, do you have the business model to make it work? Can I get a return? They're often less interested in your mission and your goal. Not all investors, some social investors are still very interested in your mission, but in general, like bigger banks and others, they're less interested in general. Banks and SME funders typically offer debt rather than equity products because they're more risk averse. They're not as interested in taking big, large risks that an equity or venture capitalist might be interested in. Eligibility will vary, but sometimes they'll look for a security, which what I mean by that is that you've got some asset that they can reduce their risk of their investment. And the timeframes, though, one good thing about the timeframes for these is sometimes they can be quite quick. So sometimes they can invest in you in 1 to 2 months, even sometimes up to a couple of weeks. So if you're looking for investment quickly, sometimes that's a really good place to go. Social investors, they're a bit of a strange bunch, but they often will look for very much mission alignment. The product fit, they mainly offer debt, but it can be a bit more flexible or patient than banks and SME funders. So they sometimes have, slightly broader terms, but they also can sometimes be a bit more expensive. So you have to be careful. And then the timeframes can be up to 6 months, and the eligibility will really vary. But yeah, they'll invest in you if you're a KIC, for example, or your legal structure is something they'll look at. They'll look at your geography, and they'll definitely look at your impact and what you're trying to do. So just to flag that is that they're a bit different. But that hopefully that gives you a bit of an overview. So what I want you to do now is just think about it in your head, in your business. If you take family, friends, and public, angels, and venture capitals, banks, SME funders, and social investors, choose your top 2. Who do you think might be a good fit for you based on what we've just talked about? Think about product, think about eligibility, timeframes. What do you think might be your top 2? I know it's a bit broad right now, but you can probably narrow down at this stage at least a couple that look somewhere along your lines. Maybe I can do a bit of a show of hands. Who thinks that they might get funding from their family, their friends, or their public over the next period of time? There's a few in the room. Perry and Ivy and Natalie. What about angels?
Maybe.
Natalie's interested in the angels. N. I don't actually know your name, N. NH. What's your name?
Nadim.
Nice to meet you. You're interested in angels. Why are you interested in angels?
Because I'm looking for, well, my focus is the time frame and also product fit. So I feel like, and obviously what I want to do is I want to do food. So it seems like they would be most suitable for how fast I need the funding, and also, yeah, it just best suits the business type.
Right. So if you've got like a mission, you're focusing on food, maybe you're trying to do something different that doesn't already exist in
Yeah,
the
something
market.
different, yeah.
Exactly. Then an angel probably is a good fit for you. It's probably a good place to start. What about venture capitalists? Anyone put their hands up for that?
Yeah, with venture afterwards, after about 6 months. 6 months to a year.
Angels and venture capitalists are quite similar, and sometimes it can be hard to distinguish between them. But angel is normally an individual, and a venture capitalist is normally an organization. That's one way to think it through, just for everyone who's sort of thinking about that as an avenue to go down. What about banks? Anyone interested in the banks? How do we feel about banks? Hands up. We don't have many fans of the banks around here, I don't think. Perry's interested in the banks. But they don't look super popular. SME funders, probably similar. Well, Kiki's maybe interested in that. And then what about social investors? Anyone interested in social investment?
Quickly, we have a question.
Yeah, go for it, Derek.
Yeah, can I just ask a question? It's slightly a bit different. I just want to see whether it's a franchising model. Is that fit on this slide which you just talked about?
The charity model?
No, franchise. Franchise.
Oh, franchising.
Yeah.
Is that what you do?
No. I'm just thinking whether is there an opportunity out there for that? Is that this model which can fit within this? Or what do you think?
So franchising is, so there's a couple of things with franchising. I guess the investment, I can share some resources on franchising because it's a bit more specific. But in terms of franchising, it's definitely still an investment model. And you can actually do either debt or equity into franchising. But also franchising will massively depend on who's the organization actually doing the franchising and how does that work and what's your legal structure. I can send some more specific resources about franchising because there are some like specifics that are a bit different after this. So let me just write that down as a note and I'll share some more on franchising because it does take a little bit to like, there's just some specifics around what you can and can't do in terms of investing in franchises.
So when I share the information, I'll actually have this for everyone. Was there any other questions?
Any other questions?
Can I just back up just something that you said earlier with regards to finding the right investor that fits you? That's so true, because I had a scenario a couple of weeks ago where when I was in America a couple of months ago, I met this guy, and it turned out that he is the CEO for P. Diddy's music company, Revolt. So we connected online, and then he flew over to London. He was in London for a little while, but he's on the board of Ben & Jerry's. And so they were having discussions, obviously, about what they're doing. And I thought, oh, maybe this is an opportunity for me to kind of not fully pitch my women's home, but just mention, look, I've got this women's home looking for funding, blah, blah, blah. So I put it out there to him. Do you think Ben & Jerry's would be interested in supporting this cause of this organization? And he said, well, to be honest, probably not at the moment, because they were focused on certain things. And the three things that they were focused on is eradicating white supremacy, climate change, and European refugees. So with the European refugees, I thought, well, that could still be housing women that need, you know, somewhere to go. So in my mind, I'm still like, okay, I'm still going to go back to him, you know, sometime later on, because that could still work for me with building the women's homes. But it was just interesting to know that that's their focus. So it feels like you have to do a little bit of research on some of these like investors and these organizations and people to understand really, you know, like you rightly said, where's the fit? Does it work? The two of you in partnership, you know, does it really work for the two of you? So yeah, I just wanted to kind of just give that example, because that was something I experienced only a couple of weeks ago.
Great, thanks for sharing, Natalie. And that kind of, you've read my mind, because research is really the phase at this stage. Finding the right investor does take a bit of research. And my recommendation is to go out, explore about 5 to 10 different types of investors, prioritize those investors. So choose 2 to 3 that you think are actually maybe relevant for you. And even if you don't want to apply for right now, just keep them in your back pocket, and then plan. What might you need if you want to have a first chat with them, if you want to start an application? What are they asking for in the application details? And I'll explain a little bit about things they might ask for, but just go into that. I think we've got a question from Kiki. You've got your hand raised. Should we take that?
Yeah, hi, Duncan. So my question is a little bit odd in the sense that, sorry, my video is not on. I look like death. I've been working crazy hours. So my question is around the kind of investor that I want. Basically, I don't really want money, which sounds odd. And tips will be going, yes, you need money. I don't really want money from an investor. But what I think I want from an investor is backing, like their social support, like them talking me up to people to say, hey, like more like an awareness piece rather than their financial advice. Because I would prefer to bootstrap. My business doesn't need huge financial investment upfront. So like, where does that fit in the plan, and how can I really go about getting an angel investor or anyone who can say, hey, we really like this, and we support your mission, we want to get behind you and promote you and support you to other people without necessarily giving me money, essentially. Yeah,
so I think there's probably 2 core avenues you can go down in this case. So the first is like accelerators. And sometimes what accelerators will do, and I don't know your business model, Kiki, so this may not be relevant, but accelerators might say, well, we actually may not offer investment, but we will take 5% ownership in your business. But what we give in return is access to our network or access to expertise, and we'll take you through a structured program of support to get yourself in really good shape, you know, for growth and development. But you may say, well, I don't want to give up any ownership of my business, so that maybe feel less relevant to me. Some accelerators, by the way, also give money, but most of them don't. And then the other model might say, actually, what you're looking for is an advisory board. So there'll be loads of people that are investors who may be interested in investing you further down the line, but you could ask them to be an advisor who actually engages with you, who supports you, who gives you access to their networks and contacts. And you agree further down the line, if maybe an investment with them is relevant, And a lot of advisors are interested in doing this because it helps them understand more about different business models. They may also be really interested in mentorship and support, and they may want to give back as well without necessarily investing straight up. But that kind of depends on the different individuals that are out there. But there are lots of people that are interested in doing that. So that's just two options that you might want to explore if you haven't already.
I love the sound of the advisory board. Thank you.
Great. Rebecca, you've got your hand up as well. Sorry, Rebecca, I've got you on mute.
I just wondered, and I put this question in the chat as well, but where would we find that sort of list of investors to start that targeted research process?
Great. I feel like everyone's reading my minds. All these slides are working out really well for me. So I was so last week we shared a resource, Good Finance, and it's a really good resource. You should check it out. But they help you filter your preferences. So if you actually go on the website, you can say, here's how much I'm looking for, here's my focus, and you can actually hone in on a couple of different investors that are available. I would flag, they're mainly social investors, but some of them offer equity, some offer debt. It's a mix of a range. You can also see these names here. These are just a few names to check out to start doing the work. That's not an exhaustive list, but Good Finance has a much longer list. So definitely for a startup of 10, I think these names are really helpful. And I've tried to give you a combination of both debt and equity, so you can kind of see how different they are, because they do look quite different. So let me just show you an example of that. So here's an organization called CAF Venturesome, and they offer debt. So, and remember, debt providers are a little bit more risk averse, and they want to make sure that they can guarantee their returns. But you can see on the eligibility criteria, they're asking quite specific questions. Now, CAF are an impact-related investor, so they're also interested in your social investment. So they're asking what documents you have available, have you been trading, for how long, are you making this amount of money? It's really quite specific because they want to make sure you've got the business model, if you remember, to meet the mission. Now, let me show you an example of an equity investor who's focusing on a big global issue. This is their eligibility criteria, and it's super different. So they say, we want you to be post-product pre-revenue. What does that mean? Basically, they want you to have some sort of product or service already in the market, or it works, but you don't necessarily have to be generating loads of income yet. They invest in UK technology companies with global ambitions. So remember when we talked about that risk return profile? They're willing to take big risks, but they're looking for big returns. But that's really what they're saying when they talk about this type of thing. And so you'd want to think, okay, well, am I doing technology and do I have global ambitions? And if not, then maybe they're not the best fit for you. So they kind of tell you what they're looking for, but sometimes you have to read between the lines because they're not always super clear. With this example, they're a bit more clear. You could probably tell right now whether you'd be a good fit for this. With this example on the equity, it's a bit more uncertain. Maybe you'd want to have a conversation, but you can tell that they're looking for big ideas and technology focus. So that's just a couple of examples to dig into and do your research and think about, do I fit this? Do I not fit this? But yeah, these are some names to dig into. Any more questions before I move on? Cool. Was that useful? Is that useful just to get the first section, finding your investor? Cool. So then we'll move into the next phase now, which is what does how do you build that initial relationship? What does that look like? What are some of the questions you might get asked? How does it actually work? What does the process look like? So I'm going to dig into that now a little bit. So just to walk you through the typical process that you'll see, again, it varies for different investors, but in the first 2 to 6 weeks, typically there'll be some sort of application, and that can be often it can be quite a long application for some organizations where they'll ask you lots of different questions. But some, it may just be write down your name, let us know what your business idea is, and we'll get back in touch. So that application form can really vary, and it really depends on the type of investor. But then there'll be some follow-up. So what they'll typically do is they'll get back in touch, and they might make a decision there and then and say, hey, thank you for your application, but based on this, it doesn't feel like you're a good fit. If they think that you could be a good fit, then they'll do either two things. They'll set up a time to have a phone call with you, or they'll ask you a few follow-up questions via email. So this is the process where they're really digging in to get to know a bit more about you. And this is absolutely the time that you should also be thinking about, what do I want to know about them? You know, this is the beginning of the real dating process, that once you've made that first inquiry and got engaged with them. So, and then the first decision. So what I mean by this is that sometimes investors can make a decision quite quickly after those first few interactions. Maybe they have 1 or 2 phone calls with you, or they share a couple of emails, and then they'll let you know quite quickly, hey, it's a yes from us, or it's a no. Typically, banks or SME funders, they're more likely to say yes or no in a shorter period of time, like this 2 to 6 weeks. If you're trying to look for equity investment, normally they call it like a first decision, which is basically saying, we're interested in you enough that we're now going to actually work through this more with you in more detail. So then they'll dig into it a bit more detail, they'll ask you loads more questions, and I'll talk about that in a second. But that's just a bit of an example of the type of process that you're normally going to go through and the time period. So what are some things to think about during this process when you're building that first relationship, you're having those first conversations with investors? Well, firstly, you'll be asked a lot of questions. That's perfectly natural, but I just want you to be aware that it can feel a bit, I think, intense the first time you look for investment, because it's just so unusual that you get asked so many questions about your business. So that's just one thing to think about. You will be asked lots of questions. The types of questions that you'll be asked, I'll dig into in a second. It's okay if you don't always know the answer. Most investors, if you're early stage and you know that the investor invests in early stage businesses, they know that you're not going to know everything about your business, because when you're early stage, there's still loads of things you need to try out or test or validate that you're still trying to figure out. Most early stage investors know that, but they do want to know that you've thought through different aspects of your business and you have a good idea about how you plan to grow. It can take a few weeks to go through this process, so make sure you've got some time set aside to talk to your investor, and that you've scheduled that out. So if you've got holiday coming up and you make your application, it's maybe not the best idea to do that, just because it's going to be quite tough for you to then engage with the process thereafter. And then the final thing on this is, if you feel nervous or if you're unsure, it's really sometimes a good idea to practice with a friend beforehand, maybe share some of the questions that you think you'll get and just work that through with them, so that you're comfortable when it comes to having that first conversation with an investor, that you've done it once and you know what they're going to ask, and you feel really confident that you can have that first conversation. As I say, there's really no stupid questions, you know, and it's all about a two-way street between you and the investor. So there's a couple of things in that which I just want you to maybe ask, you know, yourself when you're going through this process, but also what you should ask of an investor. So I think there's 4 things that investors particularly really value at this stage. One is like openness. So do you feel comfortable sharing about your business and your professional life? Hopefully investors don't ask you anything too personal, but they will ask you things that are related to the investment or how you are as a professional. And what would you like them to share in return? What are you looking to know about them as an investor? Often it helps to have some questions ready that you want to ask them back. Transparency. Do you understand how they actually make a decision for investment? Do you understand why they're asking all these questions? And what do you need from them to feel comfortable? Do you need them to have a phone call with you? Would you rather them send questions in writing? You know, what's your preference? Maybe you have different preferences, and it's worth just knowing that so you feel as comfortable as possible when you're going through the process. Shared value. Are you happy to give feedback to them, but also take feedback in return? So a lot of times investors might say, oh, have you considered this about your business model? Or have you considered doing this? Or are you sure that the amount that you're asking is the right amount? And investors will do this, almost all of them. And it's worth saying that they're looking for you to be a bit flexible and adaptable, but it's perfectly okay for you to say, no, I don't want to do that. But they will look for a good understanding as to why you may not want to do something that they're suggesting. And they're just looking for like a really good, reasonable answer is basically what they're trying to dig into. But, you know, you shouldn't be afraid of giving feedback in return as well. It's really important that there's a shared relationship and shared value in that process. And then relationship. So what kind of relationship do you want with an investor? What do you need from them? And what do they need for you to make you feel like you can trust them, that you can engage with them? If you're feeling that at any moment in the process, that relationship, you're not feeling the trust, you're about to embark on a 3 to 5 year relationship with these people. Maybe there's something where you need to say, hey, I'm not sure if this investor's for me based on what I'm seeing or feeling here. So it's just worth thinking about, are we building the right type of relationship? And just reminding yourself that it's definitely always a two-way street. It won't always feel like that when you're going through it, but I just want you to remember that as much as possible. So any questions on that? Do you feel ready? Things that you need to think about to have that first conversation is, what documents can you easily draw together that an investor might want to look at? So just some example, I'll send around a checklist, but some examples might be some sort of business plan, some sort of pitch deck, which shares more about what are you trying to do, why are you trying to do it. They might ask for a finance plan, or a financial model, which asks you basically, how do you imagine that the funding will be repaid, and how much do you need and why? They may ask for some information about your accounts. If you have accounts at this stage, they may not. And they may ask for, if you're looking for an impact investor, they may ask for anything that you've got around the impact that you're trying to have. Sometimes they call that a theory of change or a logic model, but not all investors have to have it in that set format. It's just those are the types of language that they might use when they're talking through that. I'll send you a checklist of the types of documents that investors typically look for at the end of this, but those are some of the things that you may want to have in place to get yourself set up. In terms of preparation, I really think it's worth thinking, what type of questions do you want to ask an investor, and how might you know that they're the right partner for you? And then finally, in terms of time, do you know that you've got the right time to commit to these discussions about your business plan, about what you're trying to do, and any follow-up? Sometimes investors will ask you for a bit more information for any requests and want to dig into that. So that's normally the process in those first few weeks of what's going to happen in those first couple of conversations and engagements. What they're going to ask, I'll dig into the next section, but that's just a bit more about how they're going to ask it and what the process looks like. Any questions or clarifications on that? Does that all make sense? Cool. Okay, so let's get into the juicy stuff. What are they going to ask you? How is this going to work? What are they trying to assess? So I want you to take yourself out of your mindset right now and think about yourself as an investor. So I want you to take off your hat as an entrepreneur, as a founder, someone thinking about your social business or your business, whatever you're trying to do. And I want you to put a hat of an investor on. And we're going to go through this exercise. And I want you to imagine that you're an investor who's looking to invest in your own idea, your own business. Okay, and we're going to talk about the things that investors look at. Risk. So what are the biggest risks with your idea that could make it work, that couldn't make it work? That sometimes is about you and your organization, but sometimes that's more about what's happening in the sector right now. Is it right now, we know the economy is in a bit of a challenging place. So that's an additional risk that may be something to consider. Return. Do you for the investment that you're interested in making, is it worth it? Is it worth the risk? How risky are you as an individual? Are you someone who likes to take a big risk? Or are you someone who's actually a bit worried about taking big risks and a bit nervous about that? And then impact. How aligned is the idea? Is there anything that you want to clarify about the type of social or environmental impact that this business idea could have? Is there anything you're still not quite sure about that? So we're going to go through this exercise together, where I want you to think about investing in your own business. I know that sounds a bit weird, but I think that's a good way to think about the mindset of an investor when they're taking you through this process. So the investor asks you a lot of questions, and these are the things, this is why they're interested in it, because they're always trying to assess the risk for the return and the impact. Does that make sense? And what we're going to do now is just go through that example together. So firstly, I want you to choose your investor profile. So if you're not a very risky person, but you're comfortable with the fact that that might mean that you don't get loads of money back. And one way to think about this is whether you consider yourself a bit of a gambler. Are you a bit of a gambler? Do you like a bit of a gamble? Or are you actually someone who doesn't really like to gamble very much? It feels a bit risky. Maybe you know, you'd rather say, oh, you know, if it's a heads or tails, I might do that because it's not too bad. But if it's the lottery, I'm probably not going to go and do that because it's just so, you know, it's so unlikely I'm going to win. Think about your profile. So are you low risk, but you're comfortable that you won't make much money back? Or are you high risk because you want to make loads of money? Choose your profile. Are you debt or equity? One way to think about this is what type of investment are you looking for in your business, and try and think about that investor profile, because that's the one that you're going to be engaging with, if that makes sense. So first step, choose your profile. Hopefully everyone's got either I'm a debt investor or I'm an equity investor. Now, let's dig into it. So here are the different areas that an investor is typically looking for when they're looking at your business and assessing your business. So again, think about yourself as an investor. What would you want to know about the market and the market opportunity? Does anyone know what I'm talking about? Can anyone suggest what I'm talking about when I'm talking about market opportunity? Any ideas?
Yeah, I was just saying, market opportunities. You've seen, I guess, something in the market whereby you're just you think you can fill a hole in the market. Basically, at the end of the day, you've seen an opportunity. I can't find another word for opportunity.
Great, yeah, but
just to add to what well, just to add to what we tried to say, really, I think it's about finding the gap in the market, basically.
Great. So firstly, is there a market? You know, how big is that market? Are you selling, you know, so for example, are you selling bananas, where we know that bananas, there's a massive market for bananas, everyone buys them, but is there a gap in the market? That's a really good question. So if you're selling bananas, do you think there's many people that, you know, aren't getting bananas right now? I think it's probably it's pretty covered, right? I think probably most markets are pretty covered with bananas. But there might be a market where you think, actually, no one's doing this at the moment. This is a really interesting space for me. And I can try that. Natalie, you got your hand raised. What else do you think might be coming into market opportunity?
Yeah, I suppose I'm just thinking of my sector, which is like property. So obviously, depending on what's happening in the economy and what's happening in that space, you know, there's always opportunities there when it comes to property. And for instance, when they brought out permitted development rights, where you can turn commercial properties into, you know, residential, there was an opportunity, a market opportunity there for you to, so I could do one of my B3 women's homes using the permitted development rights.
Great. So sometimes a market starts off not that big, and then it grows because something happens in policy or something else has happened in the sector, in the economy, that expands it. If you think about Uber is a great example where people didn't think that was going to work because they were thinking about the market for taxis, normal taxis. And then the market size, the opportunity exploded because they rethought the way you might order a taxi. That's a different size of opportunity now. Rebecca, you've got your hand up. Any thoughts or reflections from you?
Yeah, so looking at where the market's growing, if there's opportunity for market growth in that particular sector, say construction, or we were talking in the incubator program about a social enterprise in, I think it was security. There are a lot of security firms around, but not a lot of them, or there were none, which were social impact firms. So for people who want to invest in social impact, this was a great opportunity for someone to invest in that. Even though, yeah, there are security firms around, there is just one that is a CIC or community interest company. And so actually there was a huge gap in that particular part of the market.
Great. So that's really what they're looking for. Is there a size of a market that's big enough for the investment that I'm trying to make? So you think about, everyone seems to be thinking, investor hat on, what's my market opportunity? How big is it? Is there a gap? And do I know that there's a customer for what I'm trying to sell? That's a big thing that people will look into. How do I know there's a customer? Business model and product. what do you think some investors, you've got your investor hat in, what are you going to be interested in to learn about in terms of business model and products? What do you want to know as an investor? Nasim, you got your hand raised?
Come to.
Go for it.
So to me, model products, customer, the product is have a piece in the market. Yeah, what's the distance?
Sorry, Derek, I couldn't actually hear that. They're making you move.
There we go. Go for it.
Oh, no, I'm just going back. So the model and the product, I'm just going to go by the product. As an investor, I'll look at if the product is viable, if it's has a gap in the market, if it's something that is investable.
Great. So if you think about like the market opportunity as the size of the customer's problem, or the size of the problem in general, the customer's problem is the main one we're looking at when we talk about the market. If you think about the business model, it's what is your solution to solve that problem, and how different is it from either their competitors or providers in the market, but also, do you have an understanding of your costs? Do you have an understanding, what is my cost to be able to deliver this product? How much is it going to cost me, and how much money do I need to return? How am I going to get access to my customers? So you may say it's a massive opportunity in the market, but if your customer is local government or central government, well, sometimes that takes a while to reach them and build a relationship with them and get a contract. So do I know how maybe I'm going to work through that to figure that out? Those are some of the things that an investor might be looking at when they're talking about your business model. And how advanced is your product? Is your product ready to go, or your service ready to go? Is it still in your early stages? You're still kind of testing it or figuring it out. That's some of the things that they'd like to explore as well. What about finance and growth plan? Any thoughts about what you might be looking at as an investor if you're interested in the finance and growth plan?
How the business, sorry.
Almost.
I was going to say how the business intends to grow and be sustainable on its own income-wise.
Great. So there's two things they'll look at. Is there a chance for you to be sustainable on your own, but also how are you going to sustain the investment? So if you take in £100,000 or £50,000, how do you plan to pay that back? Maybe you take that in and there's a direct relationship because you're investing in building a sales team. You maybe want to have a salesperson on, and you're hoping that salesperson will then bring in the sales to pay back for that investment. But there may be other models that you're looking at and other revenue sources that are going to help you pay back that investment. So that's what they're really interested in. How are you going to continue to grow and pay that investment back?
Thank you.
What about social impact? Any thoughts or reflections on that?
Thank you. Can you hear me?
Yeah.
So I had a question earlier today through a one-to-one that I thought is very useful for you to answer. So do you want me to ask it? Yeah. So when someone is applying for shared revenue share, as an example, and they are currently got a lot more grants income than trading income. And they get this investment. Would the investor take their repayment from the grants that's already been allocated to this company, as opposed to what they've applied for, which is trying to raise their trade income?
So unlikely, because most grants in this country are what we call restricted. Does everyone know what that means? Restricted means that you have to know what you're spending that grant on. And most of the time it's focusing on what the grant provider is looking for. So you can't use that grant money to pay back the investment. So that income most investors won't look at, because you can't just move that grant funding to pay back the investment because it's restricted. So you can't just, and grant funders are often quite strict on what you can and can't use that money for. And so it's not easy to pay back an investment using a grant. There is like unrestricted grant funding where you can kind of use it for most what you want, but still an investor is nervous about using grants because they're not very regular sources of income. They're pretty unpredictable. You may not get them on a regular basis. They are looking for more trading income because they know that at least there's a customer there and you're not always applying for grants, which could be unpredictable. Does that make sense? Cool.
I was just going to say, sometimes it depends as well. So grant is targeted. For instance, I had a plan on old days where I was going to open water in the desert, if you like, but it was targeted grant because I was going to produce that particular piece of a business model and stuff. So in that sense, I was allowed to use that grant for that particular purpose, if you like. But if you do
exactly.
You won't be able to. Yeah.
Exactly. That's exactly what a grant provider wants to know. They just want to know exactly the purpose of why you're using it and how you're going to use it. But typically, that's for something where you're going to deliver something rather than to pay back an investment, which grant and funders are not that interested in that normally. So social impact, it might be how are you going to work with others? How are you going to deliver? You know, who are you supporting? Are you supporting someone who's underrepresented in this country? Are you supporting a certain community that's not been, you know, reflected in our policies, in our politics? You know, who are you working with and how are you engaging with them? Do you have any lived experience with certain challenging issues? They're often quite interested in that, you know, because you can often relate in ways that other people can't. You know, I'm a privileged white man, so I can't relate to many things that other people are experiencing. So just knowing that, I know that I might not be a good fit for certain types of you know, me being an entrepreneur to do certain things. That's what they're interested in. Policies. So do you have certain policies set up in terms of your HR policies? How are you going to run staff if you need to hire staff? If you've got, if you're working in impact or employment, you know, what safeguarding policies might you have in place? Things like that, they're quite interested in. That's often for later stage investment, but still some early stage investors will look at your policies and your approach to diversity, equity, inclusion. So it's worth noting. And then finally, your team. Who are you? What's your experience, your governance? How do you manage, you know, your decisions within the business, within the organization? Is it just you? Do you have a team? Do you have advisors? Those are the things that they're going to be interested in. So those are the types of questions, and I've got an example here of all the different things you might get asked in those initial conversations. So it's quite a lot, right? But it's okay. Because I remind you again, you don't have to have the answers to every single one of these questions, but these, at least if you know that these are some of the things that they may ask, you can do the prep work and make yourself feel really confident before you go into those conversations, that at least these are some of the areas that they might be looking for. So you remember, as I said, you've got your investor hat on. So I want you to think through now your own business, your own idea. I want you to write down or just think about 2 risks that you would want to make sure that your own business has considered if you were going to make an investment. Think about 2 things that would make you confident that your business could generate returns. So how are you going to pay your money back for the investment? And 2 things that give you confidence in the potential impact of your business. And then as an investor in your own business, I want you to really consider seriously whether you would invest right now in your own business idea. Would you invest 10 grand? Would you invest 50 grand? Would you invest 500 grand? So I'm going to give you a couple of minutes, and then I'm just going to get us to raise our hands to see if people would or wouldn't invest in their idea right now. Yeah, Mercy, you've got your hand up. Is that you saying you would invest? Or do you have a question?
I would invest in my own business, yeah.
And how much would you invest?
If I was an investor, I would invest probably up to 250K.
250K. Okay. And tell me why. What do you think why do you think it's a big opportunity? What do you think are some of the risks, and how do you think you're comfortable with those risks to make that kind of investment?
Yeah, I think the biggest risk would be the impact that it has on others in terms of what the type of business that it is. But also, in order for that to actually happen, there needs to be some sort of a team in the background working. So that money would actually go into employing people, which would then generate that income going forward.
Great. So you want to invest in developing your team,
yeah.
But there's a bit of a risk of, what happens if you struggle to recruit, or what happens if they don't, get up to speed as quickly as you want them to? Are you going to get your return as quickly as that? These are maybe some of the considerations that an investor might ask you of your business and dig into in a conversation. But if you already know that, you can maybe start thinking through that and preparing those types of questions and responses.
Yeah.
Any other thoughts? Someone's got their hand up.
Yeah, I'm thinking to invest like 50,000.
And why would you invest 50,000?
Yeah, because our business is has a potential, especially working education, secondary school, and there is a lack of black teachers, and there's a lack of other PME community. So, and young people, they don't have like somebody look like them, somebody who have experience with the schools, somebody who go through this all barrier, this all discrimination or these difficulties, and we have living experience for us. So we're gonna employ somebody that make marketing, and we know there is a market, and we get in this and we do it, but we're gonna make it like we're doing only part of the Bristol, but we want to reach all Bristol. That majority of the PME children goes to the school, so that's why we're looking for somebody.
Great. So your impact sounds like it's going to be really high, yeah. And then you want 50K. Just tell me how you plan to pay it back. How would you get that money back? So you're going to hire someone, but how are you going to plan to get that money back? How do you generate income?
Because we already generated money, but we're going to expand our business. It's our business already targeted few places. Already our model is working and people are interested in the schools, but we want to make it expand whole city. So that's why we want somebody who can do the marketing for us. And then the money's coming in and we're already generating, but we're going to get bigger contracts.
Great. So you know where your money's going to come from, and you know your impact. So your risk is probably like, are you going to get the right marketing person, and will they be able to expand across Bristol like you want to do, as part of your goal? So you might think, okay, what are the different ways I could reduce that risk? But it sounds like you've done a lot of thinking about that. So you might be quite comfortable with this 50,000 investment.
Yeah. That's
great. Any other, Ivy, you've got your hand up.
Yeah, I did. So in terms of my business, I would definitely invest in my business as it is now. I think in first instance, I'll invest £50,000. And that investment would go to getting perhaps a part-time in terms of personnel, because I also work kind of part-time. So while running the business as well. I think the biggest risk would be to get the right personnel who would, in terms of marketing and making the business well known within the community. I think that is, for me, that is the thing that I'm kind of working on. Yeah.
Great. So an investor may want to say, hey, can I see the type of job description or, the profile that you're looking for to recruit? And do they have, good connections and networks with the local community? How could you maybe ensure that? So you're trying to reduce that risk as much as possible. These are the types of questions that you might get when an investor engages with you. So typically they are trying to help you in many ways, right? They're trying to make sure that it's effective as possible, but they often have this lens on where they're really trying to assess the risk potential, the return potential, and the impact potential. So just always have that in mind. Why are you trying to ask me this question? It's normally because they're thinking about one of these things when they're trying to make an investment. Is this helpful to everyone, just to try and think about this from an investor's lens?
Yeah, really helpful.
Yeah.
Duncan, just wanted to get your view, because obviously this investment from the individual in their own business is often a key consideration of the questions that you're asking from an investor point of view, i.e., would they put their own money where the mouth is, where they're expecting me to put the money? So if you put a cash flow together which seems to pay somebody's wages and not generally geared to generating revenues, then that can be looked on negatively, can't it? And naively negatively, that they're actually not investing in their own business. And have you got any ideas as to kind of how to deal with that in terms of, tactically, in terms of presenting to an investor in a way that you can demonstrate your time and the effort and the other things over and above maybe your financial kind of input if you don't have a great deal of financial resources behind you?
Yeah, I think again that comes down to investor fit. I mean, if an investor says, "Oh, well, why aren't you putting your savings behind this?" and you don't have any savings, I'd be really nervous about what that investor is really trying to glean from that, because many businesses and individuals don't have tons of savings. If we all had lots of money, we wouldn't need investment in the first place. And I think just explaining to investors, if you've put a lot of work into this, in terms of how you've tested your business model, how you've really thought through how you're going to generate income in the future, how you've tried to minimize your costs, especially at the early stage, because you don't want your cost base to be too high. Those are things that I think are much more interesting for investors, rather than how much you've invested in your own business, if that's not even an option for you. And I think, that there's actually a very small percentage of people that can invest tons of their own savings, if they have savings at all, into their business idea. So many investors are very comfortable and aligned with that. If investors are not comfortable and aligned with that, I'd be questioning whether they're a good fit in the first place. Does that make sense?
Duncan, can I just very quickly jump in as well? I think it's worth stating as well as when you find the right investor fit, so you value alignment, etc. Oftentimes your investor is going to be a big supporter of helping you to translate those ideas, right? So how you think your business is going to make money and spend money, who your consumer is, what your growth plan will look like. If you're having a harder time, or you're finding challenges translating the things in your head and the ideas that you have into more traditional documents like financial documents or cash flows, sometimes an investor can also support you to do that. Or there's also oftentimes some kind of pre-investment support options that are available to entrepreneurs who just need a little bit more support to kind of do that translation of, this is the idea, these are the consumers that I'm going to this is who our audience is, this is how I'm going to make money, this is what my cost base is going to be, but I need someone to help me put the numbers into a model that sort of translates to an investor. So I would just encourage everyone to not feel like they have to be alone in that process.
Thanks, Trishna. Okay, so is there anyone who thinks that right now they wouldn't invest in their own business? Anyone feel brave enough to raise their hand if they think that? I think you're all pretty confident. I like it.
Confident entrepreneurs in the room.
Great, it's great to see. I'm super excited by that. And of course you should back yourself. I really hope you do back yourself. And again, I'm not saying you should invest in your own business, and I'm not saying you're able to, but it's just a good way of thinking as an exercise. What should I be looking out for here? How would an investor think about my business and my idea? What are some of the questions they might be asking? And if you've already done the work yourself, you're going to be really well set up for those initial conversations. But sometimes investors say, great, we've had that first interaction. Maybe they've worked with you in those first 2 to 6 weeks, if you remember the process, to navigate the market, understand your impact, understand your business model. And they've talked to you a lot and really understood you as a founder, now they're going to do the second stage, which is the next part of the assessment. And that's in this next period. So if you remember, normally what would happen, particularly for a later, like an investor who's going to invest a large amount, or someone who's going to focus on equity, what they're going to do is they'll typically then go, okay, thank you for sharing this information. Now we're going to take you into the full assessment phase. So that's the next, couple of months to that final decision, where they really dig into the sector as a whole. And in the first stage, they really focus in on you and your business. And the second stage is when they focus out and they zoom out and they try and understand everything that's going on around your business. So what are the types of things that they actually go and will speak to? For example, some of either your existing customers or your potential customers. They then maybe go and speak to different members in your team if you have a team, or they might speak to certain advisors or just individuals that know your business. They might even speak to other providers, whether that's competitors, whether that's potential partners in the sector. And they may also speak to your users. So sometimes your customers are your users. So if you're selling a coffee to someone who's buying coffee, that the customer and your user is the same. But sometimes your user, so someone who uses your product or service, and your customer is different, especially if you're trying to have impact, because sometimes the customer might be the government, it might be someone else who's trying to purchase, what you're doing, but the person who actually uses your product or service is different. So they would also speak to them as well. So they now are looking to verify. So in that first stage, they might have identified some risks. They might have said, okay, we think the return potential is pretty good, but now we need to verify what we've heard and find out from the rest of the sector what they think about the proposition and the idea. So that's what they do in the next stage. So it's worthwhile having a think to yourself, if you're looking at your sector, right, and you're still an investor in your business, what are some things that you might want to learn if you're an investor about potential customers? What would you ask? What would you try and find out? What would you want to know about other providers that are working in your space or competitors? If you could, and you could speak to your competitors, what would you want to know about them? What about things about trying to verify the people that might benefit from your product or service? So potential users or people in the impact. What would be some questions or clarifications you have? In order to get yourself ready for an investor assessment, sometimes it's useful and investors look on it really well if you've already done some of this work. So if you can evidence, hey, I've spoken to 10 potential customers, and you can show that in your discussions or documentation, or you've said, hey, I've got these advisors who are really interested in this because of XYZ, or hey, I've really researched different competitors in the market and this is my understanding of them, or I've even spoken to some and some are interested in partnerships, whatever it might be, or I really understand the people I'm trying to have an impact for. Investors look on that really well because it shows that you've already tried to test some of your assumptions that you might still have about your idea, and that gets them really excited. But they're still doing the same process. They're looking at risk, they're looking at return, and they're looking at impact, but they're just broadening out now outside of your business, and they're really trying to understand the space as a whole. Does that make sense? And the slightly different process there. So that's, going from your organization to zooming out. And that's why it takes them a bit longer, because it takes them a bit of time to speak to different people in the space and really get a good understanding of whether it's a good proposition for them. So maybe have a think about over the coming weeks, if there's any ways you can maybe test any final questions or assumptions you've got about your own sector and your space, and how you might get in touch with some of these people if you think that's something useful. Sounds like a lot of you are already invested in already and you're confident, but if any of you got any, risks or questions, you may want to think about that, because that's how an investor is going to think about when they think about investing in your business. So any questions on that section before I sort of give some final tips and tricks? No? Cool. So some final tips and tricks to think about then when you're going through this assessment process is just to remember that investors can't invest in everybody. It's quite competitive, but even if they say no to you, the process itself can be a great learning experience to help you think around your business plan, your idea. So it's a massive learning opportunity. Even if they say no, as long as you get some feedback. So always try and get some feedback to understand if they say no, why they said no. Remember to look after yourself. Be patient. It can be quite stressful looking for investment. I want to be quite open about that. But it's a marathon. It's not a sprint. Take your time. Go at your own pace. And again, if you find the right investor fit, that hopefully helps with that to make sure you've got alignment from the beginning. If an investor says no, it doesn't mean that other investors will, because as we've just realized, everyone's got slightly different attitudes between risk, return, and impact. You only normally need one to say yes. There are some businesses that have gone out and applied for investment 100 times, and they finally got one investor to come in, but they've been huge success stories. So if you've got the patience and you're willing to, I'd say don't give up just if one person says no, because that's another learning opportunity, and you're going to continue to build your confidence in this process. And it's okay. It doesn't mean other investors will say no as well. And finally, investors will sometimes look to challenge any assumptions or any risks that they really see in your business model or your plan, particularly in your financial model, how you plan to pay your investor back. That's perfectly normal. So don't think, often just allow them to really interrogate that, investigate that, because they're definitely going to do that as part of the process. And again, it could be a really interesting learning opportunity for you to understand why they're maybe looking at your financial plan a bit differently. But it's just to let you know that is something that might happen as you go through the process. It's perfectly normal. It's not a reflection on you as an individual or your business. Every investor does it. So just worth considering that. So I think I just want to talk about some follow-up. So we've gone through the process now, if you remember from the beginning, application. Once you've found your investors that might work for you, they're going to have some phone calls with you and some emails and engage with you and ask you loads of questions. If you remember, they'll talk about your business model, they'll talk about the market, they'll talk about your impact. Then they make either their first decision, which is saying, hey, we're interested in going forward. They then go and zoom out into the sector and they'll do their full assessment. And then they'll make a final decision. So they'll say, yes, we're interested in investment, or no, I'm sorry, this time it's not for us. We won't be investing in you. And they might give you some feedback. And then there's three things that happen after that final decision. If they say yes, they'll then do some final checks on your business and your organization. That often might include just things around legals. They might do a credit check. There are a couple of things that they might want to do just to make sure that everything that you've said, they've checked and with everything they need to. They then will draw up a contract. So that's how the terms of the investment will be used when you work with them. And finally, you'll agree how you actually want to be partnership. So all I want to say is that the work finally really starts once you get to that place, because that's when you have, the next 3 years, 2 years, 5 years, 10 years, maybe, where you're working with these investors or this individual to make the best of your business. So that's really where the relationship continues to begin and you build that out. So just some things to think about is, are there any legal or compliance checks that you need to be aware of? It's what I can send some resources over, but that really varies depending on the type of investor. Sometimes an investor might be interested in being a board member. So if you have a board, they might say, hey, we'd love to sit on the board and support you. Do you want that? Do you not want that? That's something for you to consider. Particularly equity investors who take a share of your business are often really interested in that because they think they have expertise to give and they want to support you through that. Reporting. So every investor, just like a grant funder, is interested in hearing back on how you're doing and learning more about the investment, but also the business and what you're doing. They also may want to see an impact report or any measurements or any data that you have about how your impact is going. So they'll look for financial statements and your impact maybe on a quarterly basis or an annual basis, depending on the investor. And finally, it's always worth thinking about the investment relationship has really just started. So from your end, what do you need from continued support from them? Do you want them to help you build your network? Do you want them to help you bring in specific expertise into your business? Investment, as I said, is a two-way street. Always think about what can they give you. You're giving so much back to them in terms of going through this process. It's a long process. Make sure you're getting something out of it more than just money. So always think about what an investor can give you back as well. So those are just things to think about after the investment. I won't go into too much detail just because it really depends on the investor on this stage, but those are just some things that you might that will definitely happen and things to consider. That's pretty much it. That was a whistle-stop tour. Hopefully that was useful in terms of just getting a bit of a gauge of what the process looks like, what investors actually look for, the types of questions they ask, and how you might go about finding the right investor for you. Should I open up any final questions, reflections, comments?
We have a question in the room.
Can I ask a question
Great.
before you go? Sorry. That's all. Can I ask a question?
Yeah, go ahead.
So what would be your advice for an entrepreneur who have one or two model or idea, which they can decide on which one to take? Hello? It's on, yeah.
Yeah. If I heard you, it says you've got a couple of different ideas.
Yeah, so you don't know which one to go. What would be your advice? Would you say to individuals stick to one or have a go on both?
So I think there's a couple of things to take into account. So I think the first thing would be thinking about which idea is most relevant to an investor. So which one do I think would be good to get trading income and would be sustainable? Which idea is most developed? Often most investors will want to see some, what they call traction, or often they might use the word validation or evidence. So how do you evidence that your idea is really viable, is feasible to be done? Have you tested it in any way? Have you got feedback from anyone? So normally the idea that's got more feedback or has been tested is probably the better one to start off with an investor. Some investors are super early stage. They may back you at an idea level, but it's quite rare. And it's just worth thinking about an investor, because if you think about if it's just an idea, that's the highest amount of risk you can probably take into an investment, because it's the earliest you're ever going to be at. So investors will know that they can reduce their risk profile the more you've verified or tested your idea. So I would say go for the one that A, you think is a better fit for investment, and B, you've validated or tested more, if that makes sense. And if you haven't done both, then maybe you want to wait a little bit before you go for investment and think about what you need to do before you get there. Does that make sense?
Thank you. It does. Thank you.
Any more questions in the room? Anybody got any questions? Fantastic. I guess people can put their hands up online if they've, or the hand up if they've got anything to ask. Any questions?
I'll ask for the shy ones. So I like what you spoke about the checklist. Now, what I'm thinking about is for the businesses that are developing a business plan, but yet at the same time are looking for investment, would you suggest to start the process or get all the documentation that is required in the checklist, and then you start going for the investors? So,
yeah.
Which one would
So it depends on the investor. So I'll answer from a growth impact fund perspective, and then I'll tell you how that might differ. And this is why it's hard to often giving you definitive answers, because every investor is different, like I mentioned at the beginning. But from the growth impact fund perspective, all we're interested in at the beginning, when you apply, if you're interested in us, is we just want to have a conversation with you. If you have like a high level, 1 to 2 page plan that you've written down, which just explains, here's what the idea is, here's how I plan to deliver it, here's how I think I could repay the money, great. But you don't have to have that. If you've got a high level business pitch, financial pitch, great, but you don't have to have it. And we'll work with you to get the documentations in place as you go through the process. So we'll make sure like, hey, this is the type of document we're looking for, this is what we'd like it to cover. And if you need any support, we'll work with you to make sure you've got that in place as you go through the process with us, as and when we need it. Because it feels like a lot of effort to ask you guys to put all these documents together if it's not even a fit from the beginning. So we'd rather understand if it's a good fit to work with you before we start asking for all this documentation, if that makes sense. But other investors are different. Some investors, the initial application phase, They might ask for everything. They might ask for your business plan, your financial model, the whole shebang, particularly investors that are either looking at later stage businesses, or if they're risk averse, like we talked about, how risky are they? They want to try and minimize that risk from the beginning. So they want to know you have those documents in place. So again, it depends on the investor. GIF, the Growth Impact Fund, we work with you to try and put that together, but not all investors work like that. So it's just worth, flagging that. Does that make sense?
Yeah, I think that's an important question, is about the relationship. So clearly these conversations, I think a lot of people you're saying I'm open to conversation at a very early stage. And I think people are frightened to not come at an investor totally oven ready with an oven ready plan, if you know what I mean. And can you kind of explain how that kind of works from your perspective in the relationship, in terms of your kind of engagement model effectively?
Yeah, Trishna, do you want to come in here, or do you want me to take it?
Yeah, no, I'm happy to jump in, but certainly Duncan, jump in if I've missed anything. I think I'm just going to sort of reiterate what Duncan said. I personally, having worked in both kind of more of an advisory services support capacity, as well as in the social investment space, my preference is always to have a conversation earlier rather than later. If you are still thinking about your idea, if you are still putting together financial documents as you referenced, it is always a really good idea to start to do that research that Duncan laid out, figuring out which investors might be potentially aligned, and then effectively doing a bit of a shopping period. If you've got 3 people on your short list, call every single one of them, or at least submit the initial inquiry form and see then, and then have that chat with them to see if A, your values align with them, but also is the product and the type of financing that they're providing with their fund appropriate for what your needs are. So I would say actually, internally as an organization, the first step is figure out what you need. And you don't have to have the documents in place. You don't necessarily have to have everything well articulated, but figure out what it is that you need, what resources, financial, non-financial, what time frame. So a lot of those frameworks that Duncan talked about, those initial prompts, those are actually really great first steps to then approach maybe 1, 2, 3 investors, whether they're social investors, whether they're angel investors, will be kind of dependent on you and your business and what you think you might need. From there, they will almost always tell you exactly what documentation they need. Sometimes they call it a shopping list, right? They'll send you out with the ingredients they need for you to come back with so that you can collectively shape potentially what a proposal looks like. Or you come back and you say, okay, I'm unable for whatever reason, resource, time, et cetera, to be able to do some of these things. Where can I get some support for them? That's another thing to keep in mind as well. Don't let that documentation be a barrier for you to have that initial conversation. Particularly with the Growth Impact Fund, which we think is very exciting, is we're really open, as Duncan said, for everyone to fill in that initial form, have an initial conversation with someone on our team. And if it looks like you're actually too early, potentially, for investment, or there's still some resources and some documentation that you need to get yourself over the line, we do have technical assistance available to help entrepreneurs who just need that little bit extra support to get them to a position to have some of those more in-depth assessment conversations that Duncan referenced on the progression pathway. Is that helpful? Does that answer the question?
I'd like you to go a little bit more about the technical support. Yeah, and I'm saying this because I know the businesses that we engage with and the needs that they would like to explore should they then have this discussion with you. So can you explain what the technical support entails?
Sure. It's really quite bespoke, I would say, and very tailored to, depending on the organization that ends up being sort of eligible for the technical support. I would say there was an example that was given around, I've got 2 ideas and I'm not really sure which idea to go with. That's just a little bit too soon for the technical support. What we really want to kind of offer in the technical support is entrepreneurs the opportunity to say, I've got the idea. I know, kind of what I was referencing earlier. I have the idea. I know who my customers are. I know who my users are. I know who my beneficiaries are. I know I sort of have an idea of who's going to be paying for these services. I have a general idea of what the business model is going to look like, but I haven't yet had the time or the resource or the expertise to translate some of those ideas into concrete numbers. That's something that, a consultant could come in and support you with. That's something that potentially our internal team at Unlimited could support you with. For some other organizations or entrepreneurs, maybe you are a full-time carer and you don't have actually the time or the resource to be able to step away from that role, to be able to devote to doing all the documentation and having all the phone calls with the social investor. We could potentially look at ways to help resource that. So really, I would say the kind of cutoff is you know what direction you want to go. You generally have an idea of what your growth plan might look like. Your business model is at least in the kind of shape where you can articulate it very well, even if it's not yet written down. That's the point then when we can kind of step in and say, okay, do you need legal support? We can find potentially some pro bono legal support, or help you to find grant funding to help you pay for some legal support. So if, let's say, for example, a partnership model is really vital to the success of your business, but you need a legal agreement in place to make sure that partnership is working kind of as well as possible. But you don't have the resource to hire a lawyer to do that. That's something that we can help you with. So I would say the support is often quite specific and discrete, but again, we're always open to having broader conversations about what you think you might need. And then we can talk to you about whether there's alignment with the technical assistance fund.
And again, this is quite broad in terms that it's not about social enterprises. It's just if you're a sole trader or you're a startup, you are open to all those different models of unconstituted and constituted organization. Is that correct?
So I would say we are impact aligned. So we would want to see some people like working on a social mission, but they don't have to be like a community interest company. For example, we do invest in companies limited by shares. We don't normally invest in sole traders. So that's just something to bear in mind. That's slightly different. And we normally look for people that are planning to register or are registered. So that's just something to know. But yeah, we're looking for mission alignment, but we can be more flexible in legal structure. We tend not to invest in sole traders. Sorry.
I just have a very direct question for the lady. Sorry, I don't remember your name. But in terms of technical expertise, do you have any software, flowchart software, that you can recommend or suggest or point me in a direction? Because I just think to get the ideas down, that would help me anyway.
Yeah, I'll admit I don't have any off the top of my head, but we've got a really good sort of bank of resource with my colleagues, and I will, if you just kind of maybe send us an email with that request, I'd be happy to follow up on that and send you some suggestions. That's not a problem.
Thank you, Trishna.
Yeah.
Great. So I think on that, I mean, we want to have conversations, and I think I don't actually manage investments in the fund itself, but Trishna does, or at least on the pre-investment support and the technical assistance. That's her work, but we also refer into the investment team who work alongside us really closely. So if you want to have a conversation, feel free to reach out. If you want to start an inquiry on our website, Growth Impact Fund, go onto the website. I'll send the link around at the end of this and just check us out. Maybe do your research on us. It's completely up to you though. We don't want to, it's worth exploring. And again, always think about what's the right fit for me. Are we the right fit for you? That's the question that you may want to explore and dig into. But hopefully this was helpful. I think there's a few follow-up resources that we can share with you that gives you some more specifics. But yeah, hopefully you feel confident at least now to know what the process looks like. And I hope you feel confident to have a first conversation. Most investors, they seem a bit scary, but they're not that scary once you get to know them. And if you get a chance to get feedback, it can be so helpful to have a few conversations just so you know where you're at. You can benchmark yourself and you say, oh, okay, I feel like I'm ready, I'm good to go, or I've still got a little bit more work to do here or there. But at least you know, rather than always, never being sure. It's a really good way to kind of assess where you're at as a business. So I would recommend at least having those conversations if you feel confident and comfortable to. And we're very open to having a conversation if that helps, just to help you build your confidence. Just let us know and reach out.
No problem. Thank you so much. Yeah, we'll share the slides and all that. And most importantly, we're gonna send out a survey form. I mean, when you fill it in, we get to know that you like these things, and then we can host more of them. When you don't fill it in, then we don't know what you like. So please do fill in the survey. It makes us know that we got to bring people on board. Because if you don't fill in, then we can't guess what you like. So that's really important. Yes.
Is it too late to ask one last question? Sorry.
No, it's not late. You finish at 7:30. Go on.
Yeah, I have a question for Duncan and Trishna. And one quick question. Did or have your organization invested in any business for the past 6 months? I just want to check whether you have awarded any investment recently. And if you did, in what sector?
So we launched, we announced the fund in May. So we're brand new. So our first investment, we're hoping to complete by the end of this month. It's in the employment and training sector. So they're working with underrepresented people that normally find it hard to get access to the labor market. And we think they're a really interesting proposition. They have a really strong impact. We think there's a big potential in them. So that's we hope will be our first investment. But until that's public, I can't talk about it. But yeah, we're a brand new fund. So that's why we haven't invested. You can look at our website though, and there are 4 examples of previous investments that Unlimited and Big Issue have made that are similar to the types of investment that we're going to make into this fund. So if you're interested in that, check it out, and you can get an idea of the types of organizations and founders that we invest in. But for us, we're focusing on those that have been underrepresented in the investment market today. We're focused on those who are really trying to have an impact in the space. And as I said, we're looking at early stage businesses between 50K and 1.5 million. So that gives you an idea. We're really interested in education, social and healthcare, consumer businesses, and employment and training. But those are not the only areas that we'll look at, but those are areas we've got expertise that we know we can help with. As we talk about what are our expertise, what is the way we can help businesses. So sometimes we might look at your sector and we might say, we've got no experience in that. We don't think we're a good fit because we don't know if we can help you in the way that maybe you need help. That's just something as well we may do, just so you know, just because, yeah, we can't be experts across all areas. And so we want to make sure that we're supporting businesses that we invest in as best as we can, and we're using our resources as best as we can. But definitely open to having a conversation with any of you if you want to have a follow-up.
Brilliant, thank you.
Duncan, this is a really silly question, probably. When we're talking about impact, does it have to be in the UK?
Yes, that's a great question, not a silly question. For us, yes, because that's what our investors, the people who've invested into us, we've gone out and we've got investment from other investors, which might sound crazy, but that's how investment often works. And they want impact in the UK. So for example, we've had organizations like Access Foundation, Bank of America. They're very interested in UK-based impact, but they're comfortable with that being, across England, across Scotland, Northern Ireland and Wales, but it does have to be in the UK.
And would you support someone that wants to go into agriculture, agri-tech?
It depends, would be the quick answer to that. It's probably worth having a conversation with us. I think the reason why is just because we'd want to understand, again, our focus is on UK inequality. So we'd want to understand how your agri-tech business plans to relates to inequality. So if it's in a certain region, in the UK, where, for example, it's really underserved or has previously been underinvested in, or you're trying to employ certain types of people, then yes, maybe. If you're, I don't know, if it's an agri-tech business that's just trying to make money and not have much of an impact or whatever it's trying to do, we may not look at it. So it really depends, but it's probably worth having a conversation with us.
Thank you.
Great. All right, well, if there's no more questions, hopefully that was useful. It was really lovely to hear from you. You know, thanks for spending some time and trying those exercises out and acting like an investor for the day. Hopefully it was useful just to give you an idea of the investor mindset and the types of things that we look at and explore. You know, and I wish you all the best with whatever you're trying to work on and whatever you're trying to do. And yeah, please feel free to reach out if you want to have a chat.
Thank you, Duncan. Thank you, Trishna. And thank you, everybody who's attended. This is one of a kind of series of workshops that we will continue to run. We're going to have a break in August, but we've got one more next week. And then we'll be putting another program out there through Eventbrite. And we'd like to keep this community going and vibrant. So please support and turn up. And as you say, as Sid said, fill out those evaluation forms so that we can make sure that we get the right content to you.
Right here, people.
Yes. Yeah, the next workshop is with the local social investor, residents. And they'll be here. The senior investment manager will be here. Frank conversations, probably not presentations or any of this stuff because you've already seen that. This is just about conversations, just clear out the air, what you want to invest, what you want to do, and she can just clear out the air about what's available, what's not available, what's the taboos or whatever. Yeah.
She can be here physically, or is it a Zoom meeting about?
Well, she said she'll be here physically, so COVID permitting. She'll be here. So yeah, that's next week. We'll send out all the information about this webinar, the toolkits, the franchise and stuff, and all of that will all be on the links that we'll send out.
Thank you. Thank you.